Hi, my name is Aziz, a fellow of the Association of Chartered Certified Accountants. Welcome to part 3B of the course, Bookkeeping up to Final Accounts. Today, I'm going to talk about the internal control procedures that Mr. Joe Bloggs has put in place. Now, what is an internal control procedure? What is an internal control? Internal control refers to procedures that the business has established for the purpose of securing its assets from theft and any form of misuse, complying with relevant statutory regulations, and ensuring the completeness, accuracy, and reliability of its accounting and other records. Any company that fails to have proper control procedures in place will expose itself to the risk of being defrauded by its employees, being fined for not complying with statutory regulations, and going bankrupt after being massively defrauded by its employees. Therefore, Mr. Joe Bloggs has made it abundantly clear that any refusal or failure to comply with control procedures will be a disciplinary offense. So, the control procedures are explained by this diagram. The diagram shows what happens when materials are requested, right down to what happens when they have been delivered. Now, they are also explained in a little more details down below here. When a department or somebody in a department needs materials or parts, they have to ask for them in writing by completing an internal requisition form. Here is an example. An internal requisition form. The number will be shown because the internal requisition form, just like all the other documents, are produced in multi-parts. This is a 3-part document: original, duplicate, and triplicate. So with this, as you can see, there must be a number on that, a reference number, and the date on which the request is being made must be stated. The department making the request will be indicated, and the person making the request will sign their name, will write their name there and sign and put their signature on the form. So the quantity being asked for and the date by which those goods are needed must be clearly stated. Then, having made the requisition, the storekeeper will be informed, who will then ensure that what is being asked for is not already in store. Having ensured that what is being asked for is not in store, the purchase order will be passed to the buyer. That is, in this case, Mrs. Linda Bloggs, who will then complete a purchase order for the items. Now, here is a sample of a purchase order. Yeah, here is a purchase order form. The purchase order form will state the date on which the order is being made. It will clearly indicate the address of the company and the name of the company, in this case, Joe Bloggs Auto Services Limited, and the address to which the goods being asked for must be delivered. The quantity and a clear description of every item being requested, together with the price that is expected to be paid for each item. Now, the price that is expected to be paid for each item is obtained from a list of price lists, which Mrs. Joe Bloggs keeps in her office. Okay? And that is the price that has been agreed with the potential supplier. So, having done that, the order is then placed with the supplier. Before the order goes to the supplier, the buyer, that is Mrs. Joe Bloggs, will keep a copy of that form in her office, pass a copy to the storekeeper before sending the original to the supplier. When the goods arrived, when they are delivered, they are checked against the purchase order, a copy of the purchase order kept in Mrs. Buyer's office, and a copy of the requisition note, which is also in Mrs. Buyer's office. Having certified herself that everything's okay, she will complete a goods received note. The goods received note, a copy of the goods received note is given to to whoever delivers the good, and another copy is sent to the storekeeper together with the goods. The storekeeper will check everything on the goods received note, and having certified himself that everything is okay, will receive them into the store, because he's in charge of the store, and if anything goes missing, he is the one who will be held responsible. Now, issuing goods. Nothing gets taken from the store unless it is absolutely necessary. And items that are not fully used, which are not, those items that have not been used must be returned at the end of the day. The storekeeper is the only one who is allowed access into the store for security reasons. Like I said before, all the documents that I mentioned above, that is requisition form, purchase order, goods received note, they are all serially numbered, and they are kept in the bookkeeper's office. Any cancel sheet must be kept and accounted for. It mustn't be thrown away. Now, suppliers are also asked to quote the reference number of each purchase order on their invoices. And it is also made very clear to every supplier that any invoice that does not have a purchase order reference number will not be paid. The bookkeeper, on receiving the invoices, will verify the VAT registration number to make sure that they are genuine. Now, at the end of every month, other employees of the organization of Joe Blocks Auto Services Limited, excluding the storekeepers, they go into the store to physically count all the stock items and record them on a stock sheet, and record them on stock sheets. Here is an example of what a stock sheet looks like. The stock sheet will indicate the description of every item counted, the quantity of every item counted, and the quantity, only the description and quantity of items counted will be recorded. Now, at the end of the stock taking exercise, the items all the stock sheets are passed to Mrs. Joe Blocks, the bookkeeper, who then assigns monetary value to every item counted using the list, price list in our office, because it is the outcome of that exercise that is assigning pound value to every stock item that will be used at the financial account preparation stage. Any new supplier's account created by the bookkeeper must be approved by the director. It must be approved. Nobody can just create a supplier's account without the director being aware of it. So, payment procedures. The payment procedures are like this. Invoices received from suppliers. Suppliers are paid once every month. They are not paid every day or whenever as soon as an invoice arrives. They are paid, all invoices that are due for payment are batched together at the end of every month. First of all, every one of them is matched with a copy purchase order, a copy goods requisition note, and a copy goods received note. They are then batched together. The details of every invoice are then compared with with the attachments that all the the requisition note, purchase order, and goods received note. If there is no problem, then they are approved for payment. If there's a problem, the invoice is immediately sent back to the supplier for correction. Actually, that occurs as soon as they arrive, before they get to the payment stage. Having been satisfied that everything is okay, the bookkeeper, prepares a list of all invoices that are ready for payment and submits the list to the director for approval, together with all those invoices that are ready for payment. This is how it happens. Invoices that are ready for payment, which are deemed okay, appear. There is a list of those invoices are prepared. Now, all those invoices are then batched together, and that list is placed on the batch and presented to the director for inspection and approval. To show that he has approved the invoices, the director marks every invoice approved for payment. Actually, put a date on every one of them before they are paid. The bookkeeper checks the bank balance to ensure that there is enough money in the bank account to accommodate the payment. After that, the bookkeeper then prepares a list of invoices. They then prepare a BACS list, a list of BACS payments, which is then presented to Mr. Joe Blocks, who will then make the BACS payment in his office. So, if payment procedures are not followed, what could possibly go wrong? If the procedures explained, are not followed. Any employee could connive with a supplier to bill the company for services or goods not supplied, and the company will be made to pay. That employee will then split the invoice value with the supplier. Second, any employee could create a fake supplier's account in the name of their own personal company, and the company will bill Joe Blocks Auto Services Limited for goods or services that are not supplied. Paid invoices that are not marked paid could be presented again for payment, and the money will be shared with the supplier. If suppliers' VAT registration numbers are not genuine, HMRC will not allow the company to recover the VAT that has been charged on the basis of invalid VAT registration numbers. That is VAT inspectors, and they do inspect. And when investors come around and they see that VAT has been claimed on the basis of a bogus VAT registration number, the claim will be disallowed, which will then needlessly increase the company's cost and reduce its profit, because the company will then have to bear that extra cost represented by the VAT charged incorrectly. Another problem that could arise there if internal control procedures are ignored is that the company's final account could be rendered meaningless if invoices that are not supported by approved purchase orders suddenly arrive after the accounts have been finalized. We prepare your financial statements, accounts have been finalized, everybody's happy, the company has made a profit. But somewhere under somebody's desk, there's a huge batch of invoices without approved purchase orders. They just came from the blue, but they have to be paid, which means the company has understated its cost. It has not actually made any profit, it has made a loss. And the company may not even have received the goods or services stated on those invoices. In other words, employees may have colluded with suppliers to defraud the company. And the cost to the company could run into several thousands of pounds. Now, here are the symptoms of procurement or purchases fraud. Well, some of the symptoms, because procurement is a very fertile ground for fraud. That is where dishonest employees make money and live above their means. If you have employees putting pressure on the finance team to fast track payment of particular suppliers' invoices, Please, can you please pay this one very quickly? This one is very urgent. There's something going on there. There's something wrong. There is an unholy alliance between that supplier and the employee, which needs to be looked at. Now, you also have endless office refurbishment or innovation. It's just ongoing. People they are always fixing this and refurbishing that and changing this and changing that. Now, there's an opportunity there for employees to take bribes from contractors in exchange for awarding contracts for unnecessary repair work or refurbishment work. Senior employees operating private businesses, which also supply goods or services to the company they work for. Now, that is conflict of interest. This could lead to over-invoicing or false invoicing for goods or services that were never delivered. Now, if controls over bank accounts, these are the controls over bank accounts. As they say, cash is king. Therefore, to avoid running out of cash suddenly, Joe Bloggs Auto Services Limited has put the following controls in place. Its main banker, HSCC, has been given a list of approved signatories to the account. Now, here is a copy of the minutes of the company's board of directors. The board met on the 2nd of April, 2019. Joe Bloggs Auto Services Limited. Now, at the meeting, Mr. Bloggs himself was there. He chaired the meeting. Mrs. Linda Bloggs, the bookkeeper, was also there. And in attendance were also all the 3 mechanics of the company who also happened to be departmental managers. Now, briefly, the meeting mandated the bank to only recognize Mr. Joe Bloggs as the main signatory to the account, while Mrs. Joe Bloggs is recognized as the second signatory. But Mrs. Joe Bloggs' authority is limited to £300. Any amount above that must be countersigned by Mr. Joe Bloggs, that is the director. So, which means the only person who can actually make any huge payment from the company's bank account is the director himself. So, the bookkeeper's authority limit has been set at £300, like I said before. Now, also, only the director can set up direct debits or standing orders on the company's account. Only the director can do that, nobody else. Direct debits and standing orders that go through the company's bank accounts, which appear on his bank statement, are regularly verified for legitimacy. Account balances are closely monitored and bank reconciliation is carried out on a regular basis. Any items that remain on bank reconciliation as uncleared or outstanding for too long are thoroughly investigated. Now, what could possibly go wrong if controls over bank accounts are ignored? Now, this is just some of the things that could happen. Departmental managers or even long-serving junior employees could set up direct debits or standing orders on the company's account for personal transactions. In any organization that has a very high staff turnover, that is where employees just come and go on a regular basis, this kind of fraud can go on for years without being detected. Any dysfunctional environment where control procedures are ignored even by senior executives and virtually nothing works. Direct debits or standing orders could be set up on companies' bank account for employees' utility or even credit card bills. Now, control over income. Joe Bloggs Auto Services Limited does not provide services to any of its corporate customers unless the services have been authorized at the very senior level of each organization through approved purchase orders. when a vehicle is booked in for repairs or servicing, a list of what needs to be done is prepared and compared with the purchase order received from each organization, from each corporate client. In the absence of any discrepancy, the driver of the vehicle that needs to be repaired is asked to sign. At the end of each service, the bookkeeper of Joe Blocks Auto Services Limited sends an invoice to the corporate customer, together with a copy of the purchase order placed. The invoice with the invoice clearly stating the reference number of the purchase order sent in by the company. At the end of every month, each customer is billed after the service has been completed, like I've already said. So at the end of every month, a statement of account is sent to each corporate customer. Also at the end of every month, an age debtors analysis, that is a list of invoices that remain unpaid, which shows how long each invoice has been outstanding, is produced for review. Invoices that are over 21 days old are thoroughly investigated for validity, and the corporate customer concerned is contacted for confirmation of the amount owed and when payment will be received from them. This is known as debtor circularization, which auditors sometimes perform if they are not sure. All payments into the company's bank accounts that are listed as uncleared on the bank reconciliation statement are thoroughly investigated and appropriate measures taken. This is another way of digging up, uncovering false invoicing, because if invoices have been issued falsely for services not provided, and fake payments are also used to clear them, the payments will never arrive. But those items, the fake receipts into the company's bank account, will remain as uncleared items on the bank reconciliation statement, which must be thoroughly investigated. That is how the fraud can be uncovered and stopped. Now, if income control procedures are ignored, what could happen? What really could happen? As we all know, managers are not employed just for the sake of being employed. They are employed to generate income for the company. But managers whose departments are not generating enough income or are not even generating anything at all could collude with accounting staff to engage in false invoicing, which is also known as false accounting. False invoicing occurs when invoices are issued for sales that have not occurred or services that have never been carried out. Those invoices are never sent out to anybody because they are destroyed as soon as they are issued. Later on, the invoices are then marked as having been paid, and the fake receipts will be recorded into the company's bank cash book. But they will never materialize because no cash has actually been received. So on the bank reconciliation statement, they will remain as uncleared items. I'll talk about bank reconciliation later. The aim is to keep the underperforming managers employed. In a dysfunctional company with high staff turnover, where managers just come and go on a regular basis, the perpetrators of this fraud will have moved on long before the whole thing comes to light, if anybody bothers to investigate. If false invoicing or false accounting is not dealt with on time, the true financial position of the company will not be known until it is too late to save it from bankruptcy. The company will always be short of cash, even though it may be reporting very high profits or surpluses. The company could resort to selling its assets, even buildings, in order to obtain cash, with which to pay its operating costs, such as salaries and utility bills. Failure to pay statutory debts due to cash shortage, such as VAT, PAYE, NIC, and pension, could put that company in danger of being forced into liquidation. If pensions deducted from workers' pay are not paid over to the pensions administrator, the company will be severely penalized and all the affected workers will be notified. And we all know what that will do to the company's reputation. Also, any creditor who is owed at least £750 can apply for a court order against the company and petition for it to be wound up compulsorily. If the court thinks it is just to grant the order will be granted and the company will be put out of business. So, this brings me to the end of this part of the course. Thank you very much for listening, and do take care, and I shall see you in the next video. Thank you. Bye.